Hey, what is going on? Welcome back to the channel. Today we're going to be taking a look at Multivac. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to check it out before watching this one. It's going to be in the top right hand corner of the video. Now, jumping into the daily chart. So in the last video, which was uploaded January 8th, as you can see, we went back down a bit more, a little 11% move down. And as you can see, we almost hit our support level that I gave you over here at 0.00583350. We almost got there, didn't manage to get, down there, but we'll see. I always tell you to buy or to set the buy orders slightly above the support level. So if you got your buy order above this support zone, you should have been filled. And from there, obviously 93% move for Multivac, very good. And the 55 daily EMA is holding us back down. It's our resistance at this point. We got back above the 20 EMA, which is bullish. And now the 20 EMA should be our support zone for now. And if we just zoom out a little bit, you can see that Multivac has been doing great things. So essentially what we've done over here is we had a high, we printed a low. We had a higher high, we printed a higher low. So we are essentially in a beautiful uptrend. So what can happen right now if we can start moving up, get to the 1.272, that's going to be our next higher high, and then we can come back down and print another higher low over here, and then we can start moving back up. So that's just the perfect scenario. Obviously, if Bitcoin starts pulling back down, all the altcoins, especially the lower cap ones, are going to get destroyed, and those will be great opportunities to buy back in. So if you see yourself come back down, look for the 0.0058350. That's a great support level, and we can potentially get sent back there if Bitcoin starts pulling back down, and that's going to be a nice double bottom pattern with a nice target to the upside, potentially taking us all the way to the first fib level over here, which is our previous all-time high that we set over here in April of last year. Now, looking at some resistance zones for the long term, we have our target over here at almost 20 cents as the 1.618 on the Fibonacci retracement. We have our 1.272 target over here at 0.0528 cents. That's our 1.272. And after that, we have our 1.414 at 0.09112004. So that's the 1.414 and the 1.618 obviously at 20 cents above that. So those are my long-term Multivac targets. Obviously, with the continuation of the bull market, we can get overextended all the way to these, higher fib levels. But I like to stay conservative. I like to take profits along the way because I've been burned so many times and I've learned my lesson. And if I'm holding a crypto for the long term, I don't care about these price fluctuations. I just set a sell order at the price that I'm comfortable with, and I just wait, and meanwhile I can stake or earn passive income on those cryptos. But if you're swing trading, then yes, you should pay attention to the resistance levels, to the support levels, and as well as if you're holding for the long term, you should buy off of these support levels, and you should buy these dips as much as possible because your maximum profits will be made once you buy these dips. So that's just a little pep talk. Don't know why I did that, but whatever. Let's jump into the daily RSI. So as you can see, we do have looks a bit confusing. It really isn't. So we have this white trend line over here, as you can see, and we've hit our head on this trend line 1 time, 2, 3, 4, 5, 6 times previously. Then we have this green trend line that we've been holding as support ever since July of last year. We lost it here in November. We've hit our head on it 2 times, and now we're potentially looking for the third bounce as resistance off of this green trend line. So if you see yourself run into this green trend line and you hit our head on it, that can be your potentially nice take profit zone, because from there you're going to pull back down and either bounce off of this white trend line and make another move to the upside, or you're going to lose this white trend line and go a bit lower. So I don't know what's going to happen, but you should be prepared for both scenarios. Now, if we look at the daily chart over here, you can see we've had 1, 2, 3, 4, 5, 6 daily green candles, and we're bound to have a little move to the downside, potentially bounce off the 20 EMA, which would be healthy because you can't be going up forever, right? What goes up must come down. So you should look for a nice support level. We're going to jump into the 4-hourly chart right now to look at some support levels. Okay, so we are on the 4-hourly chart over here, and we're hitting our head on the golden ratio over here. So I have set up a fib over here from the swing low that we printed just a couple of days ago to the swing high that we had at the end of December. That gives us the 1.618 target over here. Actually, I just changed the color for the 1.618 so I can see it a bit better. So we do have the 1.618 as our technical target once we start breaking our level fib 1, basically over here, this first fib, right? This swing high. Once you start breaking that, you're in a technical target to 0.0194913, right? But you're hitting your head on the golden ratio over here, which is kind of expected because, as you all know, I keep talking about this almost in every single video. The golden ratio, the 0.618 is the golden ratio of the fib retracement. So that means that that is the level with the most, with the strongest resistance, right? If you're coming from below, it's going to be your strongest resistance level. If you're coming from above, it's going to be your strongest support level. So you have to keep that in mind. So if you have drawn this fib out before even watching this video, you would have seen that this is your resistance level. You could have taken some profits at 0.011474. And right now we're looking for support on the 0.5, which is below the golden ratio at 0.010158.2. And below that, we have the 0.382 at 0.0091690. So I'm just going to mark these two levels over here. Those are your potential support zones. Now, jumping into the Stochastic Rsi on the 4-hourly chart, you can see that we have been in the overbought over here, and we're pulling back down. So potentially once you find yourself down here on the stochastic in the oversold below the index of 20, that is when you should be dollar cost averaging, based on this indicator. You have to use these indicators together. That's when they work, the best. On the RSI over here, you can see that you are overbought at the minute, and we have had a couple of moves over here in the overbought zone. Now let's compare them with our price action, and let's see if we're printing any sort of divergences. So let's see what's going on over here. We have our move down. Yeah, so we do have a bearish divergence here on the 4-hourly chart because you're printing higher highs on the price action, but you're printing lower highs on the RSI, which is a bearish divergence. This means that we can potentially have a move to the downside. And, it's expected after this nice move to the upside, you should look for some support. So the 4-hourly 20 EMA is a great support level as well. And the 4-hourly 55 EMA is something that you should keep an eye on as well. Now, jumping into the MACD, which is a lagging indicator, which means that the move happens on the chart and then or the price action, and then it happens, or then it reflects on the MACD. So here we had our bullish cross right January 9th, just the day after I uploaded the last update on Multivac. We had the bullish cross, and from there you can see the appreciation. So the MACD does work, right? Because pretty much in every single video we take a look at the MACD, and once we have a bullish cross on the daily, 4-hourly, or the weekly, we see nice appreciation of the price, right? So this means that you can look and work with the MACD, but it's just, if you look at it and without using the other oscillators, it may not work at all times. So that's why I use all these indicators together. So that's pretty much it, guys. If I missed out anything on the charts, make sure to let me know down below in the comment section. Feel free to check out our Telegram chat and our Discord server. We have a Patreon as well with great low cap gem calls, personal technical analysis reviews, personal video requests, and all that type of stuff, buy and sell alerts, as well as low cap gem calls. I'm going to catch you in the next one. Goodbye and good night.